Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, factor and core equity strategist at Invesco, for a weekly review and activity in the Nasdaq-100. We'll also take a look at Fed fund rate targets as well. Ryan, it's great to see you as always. Welcome back to Trade Talks, and let's get a brief recap of what transpired over the past week in the Nasdaq-100.
Thanks, Jill. It's great to be back, and a tough week for Nasdaq-100 with QQQM and QQQ down 1.99% and 2% respectively. It's underperforming the S&P 500, which was down 0.69%, and the S&P 500 value, which was up 57 basis points. We saw stocks come under pressure after last Wednesday's Fed hike of 75 basis points, sent markets lower. But then on Friday, we saw a little bit of a rally following some jobs data, where non-farm payrolls advanced by more than economists expected, yet the unemployment rate also climbed to 3.7% from 3.5. But we're seeing some volatility today, due to earnings and maybe ahead of tomorrow, where I would expect another eventful day with the release of the October CPI, projected to see a 7 handle in the reading for the first time since February, with economist expectations at 7.9% year over year. That's down from 8.2% year over year in September.
Yeah, it'll be interesting to see just exactly how the market reacts to that, right? We got through the midterm elections. The results were too skewed to one side or the other, which I think eliminated some uncertainty out of it. We see CPI data coming in, to your point, a little bit better than expected, if that is in fact the case tomorrow. So it makes you wonder, when you look at the Fed funds rate, what are the expectations for the next FOMC meeting and rate decision?
Yeah, and you look at all the uncertainty in the market and hand-wringing around the elections, and chances are it looks like not much will change. So the markets stay firmly focused on inflation, and the Fed hiked 75 basis points last week. The Fed kind of referenced the need to take into account the cumulative tightening of monetary policy, basically kind of the lagged effect in which policy affects economic activity. It takes some time for those Fed hikes to kind of work themselves through the system. Then on top of that, you sort of have the asset roll-off, which just doubled in September. So there can be a little bit of a delay on how all of that policy kind of trickles down to the economy. Although, in the press conference last week, Chairman Powell did note that it's very premature to think about pausing. Right, so talking about we got a ways to go in terms of rate hikes. It did reference that as time goes on, the speed of rate hikes becomes less important versus the terminal rate and length of time. So basically, it's suggesting that that we're moving to a higher level of rates and keeping them there until we start to see some real progress against inflation. Many took the comments to indicate that maybe the expectation for December is 50 basis points, and as we look at the Fed funds futures from earlier today, seems to indicate the same, with an implied move of 57 basis points priced into the market, so indicating more investors are expecting 50 basis points rather than a follow-up of another 75 basis point hike in the mid-December meeting.
And Ryan, what if we break it down to sectors? Where have you seen relative outperformance?
Yeah, so versus SPY, kind of a proxy for the S&P 500, we saw outperformance of the healthcare sector in QQQ versus its counterparts in the S&P 500, along with outperformance and an overweight of the communication services sector. Underperformance really driven by an overweight and underperformance of the sector in consumer discretionary. I was dragged lower by Tesla, down over 16% for the week. Although, as we look at the tech sector, we saw that sector outperform its counterparts in the S&P, but the overweighting in QQQ made it a relative detractor from performance. But broadly, I think as we look over the last week, the best performers within the Nasdaq-100 and QQQ were some of these Chinese tech names. JD.com up over 18%, Pinduoduo up nearly 17%. There's all kind of based around comments over the weekend where a lot had expected China to kind of reopen sooner than anticipated. What we got instead was that the zero COVID policy remains intact, although there are some commentaries around criticism around the handling by certain cities of too aggressive of a stance in their handling of the zero COVID policy. So I may have given some optimism that there may be a change in the zero COVID policy forthcoming, and shares of a lot of these Chinese stocks that have been beaten down, particularly in the tech space, rallied as we think investors may be positioning portfolios ahead of that perceived change in policy. And then, just to make quick mention, the biggest individual contributor to relative performance versus the S&P this week was NVIDIA, up nearly 8%. We saw some interest in the beaten down chip names. Ahead of that, NVIDIA is scheduled to report its Q3 earnings next Wednesday.
All right, Ryan, great to have you back with us. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.